Welcome back, everybody. This is Brian. Thank you so much for coming. And we had some interesting breakout rooms there. We're an investor in ed tech, let's start there, and in health, both telemedicine and in Coursera. We think the space you're in CareAcademy is fascinating. What was the biggest and most surprising question from the breakout room, if there was one, Stephanie or Helen? You guys have to come off mute too.
Stephanie, you want to go, or?
Yeah, I was just going to actually cover what you talked about extensively, which is, so there's a question around like, how do you size this market? How big is it? How do you think about your competitors? And I think, one thing that's really interesting with CareAcademy is, yeah, at its core and at sort of the start of what Helen is building is really around training and reskilling direct care workers. But, beyond that, there's these other, sort of laddering out around specialization of care as it relates to chronic illnesses and disease, and how that impacts over the long-term patient outcomes, right? So I'll let Helen also, sort of expand on that a bit, but I thought that was a profound insight that we were able to capture in the breakout.
I really appreciate that, and absolutely. And I really love the question around, how are we thinking about collecting best practices and really driving that. For us, obviously, as an education company, the obvious is how effective is the learning and what are people learning? Are they carrying that forward? Something that is not so evident, and I think a way that, we think about at CareAcademy always leading from the front. And a key point of differentiation is measuring healthcare outcomes. So we have a role specifically within CareAcademy over accordingly to our growth. We are essentially measuring the healthcare outcomes for patients of the folks that we're training and collecting those best practices, not only in education realms, but also in healthcare realms too.
Are you getting the best outcomes, would you say, compared to your competitive set?
Our competitors, let's even start with the fact that our competitors aren't even measuring this, right? So for us, we've kind of raised the bar in that way.
Yeah, that's great. That's great. And, we found the same thing with Doctor on Demand, outperforming all the other telemedicine companies because they had their own doctors who pretty much predominantly deliver tele. So moving over to CNote and Oliver and Kat, thank you so much for your remarks. There's a number of ways we can explore fixed income, socially responsible fixed income with CNote. Without it being a pitch, Catherine, I think everybody here probably has fixed income as part of their holdings. Can you just explain quickly?
Yeah, absolutely. So mostly for individuals, family offices, they usually come to us either directly asking for information, where we're happy to have a phone call and talk about what we do, how we do it, and how, whether or not it's a fit in terms of align with your portfolio goals. The second is really through wealth advisors. We work with a lot of platforms and a lot of wealth advisors, both educating them on the space, but also understanding whether or not this is a fit for that particular client or a subset of clients. And then also definitely donor advised funds. So if you have a DAF account somewhere, we are increasingly working with donor advised funds across the country to be able to move not just their impact dollars, into areas of need, but also their investment dollars through CNote.
All right, so I'm going to ask you guys in a lightning round to give a quick prediction about the end of 2021. What will be the big story in 2021 with regard to either socially responsible, impact, inclusive venture investing, or your particular companies in socially responsible fixed income and in health education? What is the big event in 2021 that we should all have our eyes open for? I'm going to start, Oliver, because I know you're so quick-witted, with you, if you don't mind, then Stephanie, then Helen, and then Catherine, and we'll send you guys on your way. So some wisdom from you, or at least a forecast from you, Oliver.
Yeah, Brian, my only quick wits are like dad jokes, and I don't even have kids yet, so that seems to put me in the catbird seat here.
You just got married, right? Congratulations.
I did this Saturday. Yes, actually, this is new hardware. So
it's a brave time to get married, so well done.
Thank you. So by 2021, I'll be receiving pressure to have kids, but also I think, a couple things. I mean, I'm not a huge believer in predicting one or two momentous events. The thing that I think will be very true in a year from today is that the preponderance of assets is going to be moving towards more responsibility. That has been a trend that's been moving and accelerating, and this crisis has accelerated it. That's not without caveats, right? So I'm sure the folks on the phone who do venture know, TechCrunch just put out a piece even yesterday, or end of last week, I should say, that, investment in female founders and founders of color actually declined during the crisis, despite everyone's protestations to the opposite. So we have to remain vigilant and make sure that we're making assets available for founders of all backgrounds. But very clearly, LPs, large institutions, and individuals, and even folks looking for positions to talent are looking for purpose, and that is increasing in velocity. So Brian, I would say by end of next year, we'll have more and more assets available. We'll have more and more funds that are being very outfront and genuine about their commitment to impact and diversity. And we hope to see those numbers really start to pay off for founders who are seeking capital.
Okay, Stephanie, 30 seconds if you can distill it to that.
Yeah, I'll leave it to the labor markets. I think we'll have a huge shift in what we're seeing with labor markets as it relates to supporting those who've lost jobs permanently because of the pandemic, but also what we're seeing in the technology sector around deeper building out of platforms for specific verticals where there is a shortage in supply of workers. In particular, in the healthcare space, I think, Helen's gonna rock it out and certify and create new pathways for 500,000, I'll say, caregivers. But I think it'll also highlight the need to reskill and cross-skill a big group of individuals in the economy. I mean, we're talking, over the next 5 years, there'll be about 34 million folks who need to be reskilled. And so I think you'll see the acceleration of that starting at the end of 2021.
Huge gap. Helen, real quick, anything from you?
Absolutely. I will, great minds think alike. Stephanie, thank you for teeing that up. I also will posit this, and I've been probably even very blunt in saying I think we're seeing the end of sort of the role of the gig worker and an evolution of what gig work looks like. I think that was heralded in the early aughts and in the last decade, but there's an evolution that's clearly needed as we're looking at the greater policy changes that are taking shape right now. And certainly, to Steph's point, greater mobility and accessibility of ways in which to reskill, to access lasting and impactful work faster. And I'm excited by that.
Great. Have you talked to Diane Mulcahy, the author of The Gig Economy of Kaufman?
I was actually at a roundtable with her a couple years ago.
Great.
But yeah.
You should check back in with her.
Yeah,
right,
yeah,
Catherine, you get the last word, and then panelists, just a reminder, we're going to stay on after we teleport everybody home, so we can just do a quick recap. So Catherine, last word with you, please.
Yeah, I'll just make it quick in the spirit of time. I would say cash and conversation. I think one of the things we're going to find is propensity to move cash. For some reason, in values-aligned investing, we started with private deals in the riskiest part of portfolios, and yet fixed income cash capital preservation has been ignored for years. Because of products like CNote, because of technologies that are coming out, it's becoming so much easier to move cash and fixed income into these great agents of change. And so I think we're going to see more and more folks understanding that they could literally get fully impact FDIC insured cash today. So why would you not, especially if we're giving you a better return on your cash? So I think we're going to see more movement of cash, and I think conversation. I think, you asked the question around, how do folks get started? Often wealth advisors do not want to have the conversation because they don't feel comfortable with the options and they don't feel educated with the option. And so oftentimes the conversation around moving dollars into values aligned options has to start with the client. And so I think with more of these options becoming visible, with the impact being measurable, and with the returns being impressive, I think we're going to see more and more clients step up and ask their advisors and require their advisors to understand the market better and provide more of those product offerings.
And Brian, if you don't mind me talking out of turn for 10 seconds, just one message to leave everyone with. When you're thinking about impact investing, something Kat said really put this in my mind, and I'll keep it really quick. Impact investing has been pigeonholed into being its own asset class for a very long time. So it's, hedge funds, private equity, venture funds, impact funds. As Kat clearly articulated, when you think about it going forward after today, if you happen to have thought of it that way, throw that out and think of it as another lens that we put on any kind of investing. So it can be low yield, impact related bonds, hedge fund assets, public markets, venture, late stage venture, anything you want, as long as it has a filter for impact and perhaps diversity as well, will count. So it's not its own asset class, it's an approach to any kind of investing in asset management.
Well, that's great. I agree with you wholeheartedly, and I think there's going to be tailwinds to generate better profits and better returns if you invest with an impact lens against all asset classes. And that's what the next decade's going to look like. It's not going to happen all at once, but we're on our way. So, and we're on our way thanks to the four of you, and you guys are on your way home, and the four of you are going to stick with me. So, Daniel, would you let people go home, and then the panelists stay with me for 5 minutes? Thanks. Thanks, everyone. See you next month. Okay. Great. Thanks, everybody. I hope you found that useful. It was a little bit smaller audience than we usually get, but there's so many of these events today. And we had our annual meeting last week, which really kind of 3 hours of this really monopolized our attention the last 2 weeks. It was great, though. This was a great session. Thank you so much. I think the recordings are going to be good.
Yeah, Brian, thank you. And knowing as you and I have gotten to know each other over the years, the quality of the community around Alpha, I have no doubt that the recordings will kind of wend their way through some really interesting folks. So, I'm glad you guys did that, and a really fun group.
Yeah, we did an LPA survey in the depth of the crisis in late March, and a number one issue was social equity and investing in social equity. And so, and these were, from family offices and super high net worths, and in Europe as much as in the US, that's our LP base, right? So it is interesting. I'm very bullish on all the tailwinds that you guys will be able to encounter in your respective businesses. So thank you for coming. So feedback to us, if you could change one thing about this format other than my lack of preparation, what would you change? Or I'm looking for ideas. I don't mean to put you on the spot, but you're all very smart.
I'd be remiss if I didn't shout out about, is there opportunity to invite other audience members? I think in the spirit of changing the face of investing, right? It's not just about, a couple of us representing, but how else can we get other investors, people of color, women, right? Who else can we bring into the conversation? So that's what I would argue for, is if there's a way, I don't know how.
Yeah. We start with that, Catherine. So we did put out through Daniel Weinstein, a sample invite we used and that we sent out several times to our base to about 3,000 people, but it's a private list, right? And they're all investors, right? So it's the typical makeup of investor class. So we did invite you and all four of the presenters to put it out to your own lists and also to any private listservs you have. We haven't wanted to make this open to the public because it would expose some of the people who come to the public, right? Some of them are wealthy and so forth. Also, I guess it's a dilemma because I think what we talked about today would be interesting to many people. Now, the videos are going to be public, right? So, but I don't know if you guys got a chance to put it out to your mail lists or out to any private listservs. Private listserv could be like, the John Gonnen blog, or there's other venture blogs or other impact blogs or lists, not blogs, listservs that we could have put it out to. So I think maybe we didn't do a good enough job helping you get the word out. But I don't think we want to make this a public event that we just blast out on the social airwaves.
Yeah, I think it's a shared responsibility, right? It's a shared, and I totally hear you in terms of exposing. And I think also that's such a meaningful opportunity to network. When I think about the people who are in our breakout room, and let's say if I was, a woman LP or a woman VC or even a woman entrepreneur, getting to interface and ask questions with these gentlemen who I would follow up with,
Yeah.
right? Anyways, it's just in the spirit of how do we keep expanding networks in an intentional way?
Yeah.
And it's work to do, right?
Right. Right.
Yeah.
So maybe we didn't do that good a job giving you guys content and collateral that you could blast out to your own lists. Because we were very distracted by the annual meeting. Could we have done a better job with that?
I think that would have been helpful. Yeah.
Yeah. Okay. We'll do
Yeah,
that.
I mean, I would also say, yeah, and I saw the materials last week when Daniel sent them out. So for me, I was getting married somewhat unexpectedly, so that's on me. Normally, I would have blasted it out more broadly. One thing that I would recommend, just because doing a lot of panel hosting myself, like I've noted that speakers like myself tend to be pretty lazy about putting the word out, is just like sending the link to your post and just saying like reshare this. That's one thing that actually Soraya Darabi at Trail Mix tends to do a good job of just being like, hey, I have a big following, I just put this out, like just retweet it. Which assumes a fairly lackadaisical approach from speakers, but being a frequent organizer and a frequent speaker, I know how bad I am at doing this.
I agree. That is a good best practice, and I think we missed it on this one. Yeah.
The only thing I would add is keep bringing into the fold, women, people of color, et cetera, as presenters, and we'll gradually bring our networks in to engage. And I think over time, if we do more of that on the presentation side, the group that'll attend, the audience will become more diverse.
Great. And I will share something. I think if we want to change the world and we want to have impact, I've shared this with Oliver before, there's no bigger lever than inclusivity, to making the investor class inclusive, to making the availability of capital inclusive. The underdogs outperform, and those that have been left out will outperform. And also, I think they're going to be much more inclusive in their thinking and their design of products and their design of businesses. So I'm with you all the way on this. Now, coupled with that, I use the word inclusivity rather than diversity in my speaking to folks. Can you guys guide me on what you think is a better word, or does it matter? And what are your thoughts?
I think it's based on your preference, but I think there is, something around a principle. I think, when you think about inclusion, it's more around a principle, right? And I think when we speak about diversity, we're talking more about the characteristics or, makeup of a group. It can be across, a lot of different lines. In the context I was using it, I was talking, across racial, ethnic, gender lines.
Yeah, of course.
I think all of it's in the spirit of inclusion.
Yeah. I just think of inclusion as being the positive way of saying diversity. I also like the expression, like, put equity back in private equity, because equity really is what we're all about. And people really need to.
Not sure it was ever there.
Yeah. No, it never was. But I mean, equity is equal opportunity and fairness and reciprocity. That's what the word means, right? So anyway. Any other feedback for us, guys and gals?
No, but apologies, as I'm literally presenting at 10:15, so I'm sorry. Okay. I should probably get
No, it's good. It's good. and you guys were all great. Really well done. So thank you so much.
Helen, you are a force. I'm excited to connect with you. And Steph, I love seeing you. So my best to each of you.
Thank you.
Yeah.
Thank you, guys. Thanks for the opportunity.
Thank you, Catherine. Really
appreciate it. Congrats, Oliver, again.
Thanks, everybody. Yeah.
Congrats.
Right. So you'll see a thank you go out tomorrow, and then a link to the videos next week, and then you guys can pile on, Stephanie and Oliver, and please be in touch. Stay in touch. So great to meet you, all of you.
Bye, everyone. Thank you so much.
Bye.
Thank
Take
you.
care. Thank you.